Hi guys, welcome back to this Moneycontrol live stream. I am Nandita Khemka, and of course we're counting down to the RBI policy outcome tomorrow morning at 10 a.m. A lot has changed since the last policy. We've had the biggest reforms that India has seen in a while. GST reforms, rate rejig has happened. We've had the GDP figures that were way above expectations. We've had an S&P upgrade as well. Of course, a lot of division as to whether there will be a rate cut after the pause in August, or will the RBI go ahead and dole out another rate cut, given the fact that Fed has also cut rates for the first time in its last policy for this year. So yes, lots to put into perspective, and who better than Latha Venkatesh of CNBC TV 18 to do that, joining us as always. Latha, thanks a lot for coming in on the show. But tell us, this time around there is a deep divide, right? Although the poll largely throws up a pause, but a lot of analysts and brokerages, for instance SBI, is saying that the apt thing to do will be to give a 25 basis point rate cut. What are the arguments for a rate cut and what are the arguments for a pause, and why is there so much division?
Well, because for the first time we are having data moving in opposite directions. As you pointed out, after the GDP Q1 data, which is 7.8, the Reserve Bank's average for the full year stands at 6.5. Yeah. It looks like that's definitely going to be much higher. So the Reserve Bank will have to up the growth data. When growth is so good, why would you cut? Yeah. That is the set of people, that is one of the arguments why people may think that they will push it, because right now it's not such a dire need. The argument in favor is that inflation is lower than expected. Like I told you, the poll that we did showed that the average growth forecast was standing at about 6.3 for the full year in August. Yeah. Today, when I poll people, the average I'm getting is 6.7. So growth has been upped by 40 basis. I did a similar poll asking people, what was your CPI average in CPI forecast in August and what now? In August, the average I got was 2.9. Now the average I'm getting is 2.5. Okay. So inflation has come down in forecasters' estimates and gone up, growth has gone up. So it's giving you contrary signals. If inflation is down, there should be space for a rate cut. Yeah. So that is the argument in favor of a rate cut. You have space. In fact, the people are going on to say that, GST was not factored in. Yeah. And there is a serious Asian disinflation, which will also seep, in fact, has already seeped in. If you ask Mr. TV Narendra, and you would have spoken to him or heard him in investor conferences, he says Bao Steel is selling steel at below their own cost. So there is Chinese dumping. Pharmaceuticals, there were pharmaceutical companies telling us. So that bit of WPI seepage of disinflation will continue even into India. That's the argument in favor of a cut more than anything else. Growth may be good now. Will it be good in the second half? So the growth argument also is pleading for a rate.
Sure, and there's a lot of uncertainty on the tariff front as well, because now Trump has been firing salvos at different sectors. Yes. IT, pharma, now film industry as well, and now some reports I was reading, semiconductors may be next. So there's so much uncertainty with regards to what will happen things on the global landscape. So in that sense, shouldn't the RBI go ahead and give a rate cut? But a lot of people are also saying that wait till December, perhaps adopt the same approach that Fed took, wait and watch, and perhaps not this time, next time. So is there another, if not this time, a 25 basis point for FY26, is it given?
Yeah, the poll that we did clearly indicated unanimity on existence of space for rate cut. Okay. The division is whether it should be given in October or preserved for December or February. That the debate is really on when and not on whether. Okay. You're right to that extent. Now, the postponement argument is that, between August and now, a lot of negative things for growth have also happened. In the sense the tariff 50% was not known on August 7th when, before we got to know about it only after the policy was announced. And then, of course, you had the H-1B visa fee hike, and then the other, pharmaceuticals, semiconductors, wooden furniture, films, all that you're saying. So it looks like so much more bad news is awaited. So there are people who say, since there is so much uncertainty, you wait. The government has given a tax cut, in fact, double tax cut, both income and indirect tax cut. Plus, you all have given 100 basis of rate cut and CRR. Let it show through. Keep the powder dry. When probably more salvos will be fired,
Yeah.
and the economy may have to be boosted, at least in terms of sentiment, and it may come in handy perhaps in December or February. That's the reason for the pause.
Yeah.
Let this play through. A lot has been done. Let it play through, and we can preserve its validity.
Okay, now in terms of stance, I know they changed it only in June after front loading of rate cuts, but a lot has transpired since then. A lot of market experts I spoke to were of the view that, if a stance change comes and even if a rate cut doesn't come, that will be a dovish signal that we'll be watching out for. Is that the sense? And do you think there is any possibility of a change in stance, because it just happened?
I told you near unanimity on fact that there is space for a cut. There would be near unanimity that they won't change stance, because it's something that is done during the cycle. If you have started a cutting cycle, then you go from tight monetary policy to I forget what Shaktikanta called it, that you accommodate later, then move to accommodative. But once you have moved to tight, that is from accommodation you have moved to neutral, then to immediately go zigzag is not something the Reserve Bank does. It would wait. But the challenge for the Reserve Bank will be to sound dovish.
Yeah.
They need not change the stance, but they can well convey a dovish signal. So the big challenge is going to be, how do I raise the growth forecast because of the arithmetic and still sound dovish?
Yeah.
The big challenge is, how will they sound dovish? And that challenge is, first of all, we are assuming they want to sound dovish. So first, it is that. Are they wanting as much dovishness as the market wants? And secondly, if they do, how will they communicate it? Last time, the most hawkish signal was not what they spoke, but the fact that they had raised the inflation forecast 1 year ahead. Q2 FY27 has been raised to 4.9, which is why yields rose. I mean, 4.9, there's no chance of a rate cut. So now there will be many things the market will look at. They will look at whether they're bringing down the inflation, which they have to bring.
Because of GST cuts.
Absolutely. Because of the GST cuts, and because in the past 3 months also, every month the inflation has been surprising on the downside.
Only this time, I think, little bit, there's hardly any uptick, but a little bit.
But it is not uptick. Inflation was higher than last month, but it was not higher than forecast.
Of course.
Not higher than RBI's forecast. So because things are surprising on the downside, what do they bring it to? Our poll said they should bring it down to 2.5. For the full year average. And for the 1 year ahead, 4.9, how low are they bringing it? GST will take away 30, 40 basis. So do they bring it to 4.5? Or do they bring it down closer to 4? In which case the market will take positive signals.
So it's the change in inflation projections 1 year forward that would signal some kind of dovishness for the market.
Signal a very big dovishness, but I continue to maintain that dovishness will be signaled more by what they say about growth. You have to raise it from 6.5 to 6.6 or 6.7. But they can say that we will cut when we see growth is in danger, or we will be ready to help the economy if growth is under pressure. If they say something like that, my sense is the market will feel more dovish. Rather than just the inflation numbers, growth is in danger, then I will help, would be possibly a more dovish signal.
Sure. What are the bond markets factoring? I ask you because one would have thought that yields would head south, especially after the front loading of rate cuts, but that hasn't really happened. So this time, what do you think the bond market will actually react to? What is the key trigger
the bond markets, hope, the ultimate hope which will not be realized is, will RBI use the words OMO? They want RBI to come and buy. But why do you buy? You buy bonds to give liquidity. But RBI has just cut CRR by 100 basis points. That's releasing like over 1 lakh crore, 1.13 lakh crore or something into the system. And so much money is released into the system by way of permanent liquidity. Because every deposit you take, you are going to keep less money as cash. Which means a little more liquidity is released in the system. When that big Brahmastra has been used, will they do OMO? If they really say OMO in any part of the context, then the bond market will be happy. That looks like very difficult. So all bond market cycles are that as you end the rate cutting cycle, when there's only one left, bond yields go up.
Okay.
They go down only when you're at the start of a cutting cycle.
Okay.
It's a little difficult after 100 basis point cut to even say we are in the middle of a rate cutting cycle.
Of course.
So it's a problem. I mean, bond yields are going to remain around the 6.5 mark. It's very difficult to see them go down unless this extraordinary, OMO word is pronounced. And why would they do that when they have released liquidity? And also, the bond market is fickle. If something happens in the US which makes it very dovish, usually that percolates to all other markets. And you may see our yields fall because of global pressures. I therefore think that the Reserve Bank will not try too hard on the bond market front because it's a difficult animal.
Sure, but in terms of liquidity, are you expecting any measures? Because they are already doing VRRs, right, to put some liquidity in the system.
There was a bit of a You were right when before we started the conversation. You pointed out that there are days of tightness that happened September 15th around when advance taxes were paid, GST was paid out. So intermittent lack of liquidity will be is a natural phenomenon, but the overall system liquidity, which is cash balances with the government, have been surplus and how. So
durable liquidity is there in the system.
There, and the CRR has only once tranche is in September. The remaining are coming.
Are going to come in,
So I don't think the bond market is at all worried about liquidity. There is enough.
What about the rupee? I mean, that's been a phenomenon, right? Every other day we've seen the rupee hitting record lows. We know that the RBI doesn't really jump in to defend a level, but only comes in when there's a fair bit of volatility. On rupee management, I mean, they usually don't speak much about it, but are you expecting anything coming from there, given the fact that we've seen rupee hitting record lows like successive days?
Okay, let me say, first one, you were on the dot when you say that Reserve Bank doesn't like to talk about rupee. When reporters force a question on them, they may give you a one-line answer, but normally they don't like to say much, except that it is a market-determined exchange rate and we only iron out volatilities, is what they will say. The second point is the conventional central bank wisdom is when the currency is falling like a ton of bricks, if you cut, then even less interest rate will be earned by those who hold rupee, and therefore it's not a good idea. It will get even cheaper. It'll fall more. That argument doesn't work now for the simple reason that in India people don't come to hold the bonds. People are coming to buy equity, and for equity a rate cut is growth oriented. So in India, in the current situation, a rate cut is pro-growth and therefore pro-flows. And it's not that a rate, not giving a rate cut will be seen as negative by the bond market, and or giving a rate cut will be seen negative by the bond market and everything will go away. No, we don't get so much. The total amount of bonds held, Indian government bonds held by foreigners is under 3%. They have limit up to over 6%, but they've not even used that space. I don't think the bond market gets scared. So if the Reserve Bank is determined to cut, the rupee will not be an impediment for them. They'll go ahead and cut despite.
All right. Last couple of questions, and we've seen a very, stupendous rally in gold, right? $3,800 per ounce has been crossed even in the Indian markets, 1,15,000 per 10 grams. Any expectations on gold loan front, rules regarding gold loans? Because I think a couple of policies ago we saw them tightening some rules, proposals of tightening the rules. Do you think there'll be some updates on that front?
I don't think they tightened. They cleaned up the rules.
They cleaned up, of course.
So it was actually a very good set of directions. Actually in some places they even made it easier. I don't think they'll touch gold at all. This is a global phenomenon where people are worrying that holding dollars may be actually dangerous because US Treasuries yields are anyway not looking like falling much. They have a very huge fiscal deficit of 6 or 7%, and there is sudden talk that we will force those who are holding treasuries to pay a fee. All these kinds of things. The Stephen Miran paper has kind of made people a little worried about holding US Treasuries and dollars, and that is why gold is rising, because of its safe haven status. It is unconnected to what Reserve Bank can do. So my sense is they will leave gold alone. It's too much of a international cycle of gold, and no one comes in the way.
Okay, so and last word really, what are your thoughts?
Okay.
Are you voting for a pause?
Until very recently, I was thinking that they will cut. But now as I draw closer, I feel it will make more sense for them to hold now and sound dovish.
Okay.
Because by cutting, the bond market is not going to pass it on. By cutting, there is more pain for the banks. Because for banks, once you cut, all the loans become cheaper.
Yeah.
Because there are EBLR, external benchmark linked loans.
rate,
So their loans become cheaper, their deposits take time to become cheaper, so they are in pain, they are not rushing out to give loans. Not much of a purpose of credit pumping is served by cutting. The Reserve Bank may well say that we are keeping our powder dry, and if growth is in trouble, or if we see any challenges to growth, we stand ready to do more. A sentence like that will be way more pro-growth than actually a cut, which will convince the market that this is the last.
This is the last one. Okay.
So that is why I have now veered over to the view that they'll probably not cut, but give indication that they stand ready to cut. My sense is, that might serve their own purpose better.
Sure, I think we're just counting down. Tomorrow 10 a.m. is when we get to know what the real decision is. D-Day, RBI D-Day tomorrow 10 a.m. So don't forget to tune in to Money Control. For that, we'll be getting you the governor's speech and of course a battery of experts to decode whether his tone was dovish or whether the markets liked what they saw, whether they didn't like it. So all of that lined up for tomorrow. Would like to thank Latha for joining in, putting things into perspective as usual. But it's a goodbye from me. Thanks a lot for tuning in. But I'll catch you at 3 p.m. on Closing Bell. So don't forget to tune in for that. Have a